If I'm doing a manufacturing business, I should know that one. What is the cost I've incurred? 4 types of transactions are there: cash transaction, credit transaction, barter transaction, and paper transaction. Each and every manufacturer wants to know that one. What is the actual cost of your product here? Costing is the techniques what we are using to get the information about the cost. Warm welcome to second sem BCom student. The subject we are discussing fundamentals of cost accounting. Cost accounting is a subject where we are going to learn about the cost of the product when it is manufactured. It is nothing but conversion of raw material into finished goods. What are the things of expenditure will happen at the time of process of conversion, or if any services are rendered? So what will be the cost for that one, and how to add the profit to earn something by the business people. And this cost accounting is very important for the people who are rendering business in the form of conversion of raw material to finished goods or any services. And even for other people who are doing in normal course of business when they purchase any product for the purpose of resale. So what is the cost of the product they've incurred to get that one, and for how many days it has been stored, and how they're going to sell that one in the market with other expenditure incurred. So we have to identify the cost as per the requirement of the business. I am Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram College Temple of Excellence, MYSURU. Today's agenda is very simple. You are going to learn about the introduction, cost accounting, costing, cost accounting, and cost accountancy. These are the terms we are going to learn and understand in today's session. First part here. See, every business person who is doing any activity of trading or commercial things here, he wants to know that one, what is the amount of profit has been earned by him. To know that one, so we have financial accounting. So where financial accounting supports the business people to know what is the actual amount of profit earned by him for certain activity, whatever is doing that one. And even the people wants to know the position of the business in the market, the financial position of the business in the market. The people who wants to know this one, the shareholders, investors, creditors, bankers, government, and other supportive people who are directly or indirectly involved in the business growth. So all these people, they need that one, the position of the business in the market with their financial aspects. So earlier we had only the financial concept here. So later on they thought that one, even with the help of financial concept, we are going to learn only the financial position of the business, but will not come to know what is the actual amount of cost has been incurred by the manufacturers. If I'm doing a manufacturing business, I should know that one, what is the cost I've incurred in the process of converting that one. The process may take here like for 1 week, 1 month, or 2 months, or 6 months, or 1 year. In this journey, what is the actual amount of cost I've incurred for conversion, and what is the actual amount of selling price has to be made for the product. For that reason, they thought that one to have the cost. Now, in the introduction concept, as here, accounting is a part of information system for any enterprise. Such information provided to people who have interest in the organization, such as see, the shareholders, they require managers, creditors, debenture holders, bankers, tax authorities, and other people. They want to know that one, what is the financial position of the business. Broadly speaking, on the basis of type of accounting information and the purpose for which such information is used, accounting may be divided into 3 categories. That is, first one will be financial accounting, second one will be cost accounting, and third one will be management accounting. So 3 categories. Based on that, requirement will be made here. The first will take into financial accounting. Say, financial accounting is a concept where Each and every person will get about the financial position by preparing the statements called trading account, profit and loss account, and balance sheet. If I prepare the statements of trading account, profit and loss account, and the balance sheet, we'll come to know what is the financial position of the business here. Say, financial accounting is mainly concerned with recording of business transaction. In every business, the transaction we have here, two types of transaction. One is business transaction, other one is non-business transaction. We have to record only the business transaction and not the non-business transaction. Now, in this business transaction, again, we have here four types of transactions are there. Cash transaction, credit transaction, barter transaction, and paper transaction. All these are related to the business transaction that are to be recorded. So, the books of account for the purpose of presenting final accounts, it is defined the art of recording every transaction when it occurs, when the event takes place there. It is the art of recording the information in the books of account. What sort of information should be recorded? What to record? When to record? Why to record? How to record? The four questions should arise in the mind of the financial accountant. So he should know that one. Whenever the event takes place, the recording concept should be in a perfect manner. After seeing that information recorded in the books of account, the person should come to know that what it is actually, whether it is a purchase or sales or payment or receiving, whatever it may be that one, or we are investing or anybody invested into our business, all these concepts will be recorded, but it should be in very simple. For example, Ram sold goods to Mohan for cash. So now, in this transaction, Ram is the person who is selling goods to Mohan for cash. Instead of writing Ram and Mohan here, we can say that one, goods sold for cash. Parties are not required here because the goods is going out and the cash is coming in. The real account says debit what comes in, credit what goes out. In this concept, I have to record the transaction information such a one, it should be very simple. Goods sold for cash, 20,000. That's enough. If we are selling any goods on credit terms, then I have to say goods sold to Mohan on credit. So then we require the party name for whom it has been sold. So this is the main concept what we have in the recording. Then classifying. When you have recorded the information in the books of accounts, it should be classified into three different accounts here. Types of accounts. Types of accounts. In this types of accounts, we have here real account, nominal account, and personal account. Like for example, goods sold for cash. Goods and the cash are the main two concepts of this transaction here. In this transaction, when we say that, let's see, goods sold for cash. Goods and cash is the main concept in the transaction here. So in this concept, the goods and cash are both are real. Both are real here. The rule of real account says for me here, debit what comes in, credit what goes out here. So here, the goods is going out, the cash is coming in. So the transaction will be a cash account debtor to sales account. I should not write goods here. I have to write here sales. So now the goods is going out, cash is coming in. Cash account debtor to sales account. This is what we are going to call classify. We have to classify that one into either real account, nominal account, or personal account. Based on that, we have to debit and credit the transaction information. And next, summarizing in a significant manner in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. They're saying that one, it is the art of recording, classifying, summarizing the information. And when you're going to summarize all the things here, when you prepare your trading account, profit and loss and balance sheet, then you're going to check that one where we are standing, and based on that, you're going to interpret, means you're going to write some decision-making concept on the process where you're standing. So based on that, in future, if you want, you can increase your expenses to earn more profit, or you can control your expenditure to earn more profit or to have the stable profit in the business. This is a major concept what we get in our financial accounting. So the information supplied by financial accounting is summarized as already I said that in profit and loss account and balance sheet. The main objective of financial accounting is to provide the information to external parties such as shareholders, creditors, employees, potential investors, government agencies. These are the people who have supported the business and where they have invested, and even they want to know that where the business is standing, whether my amount I can get back or not by the shareholders, and the employees, where the business is standing in the market, whether I'm going to get salary on regular time or not, whether I'm going to get full salary or not, whether I'm going to get only a part of the salary, because in future, if it is going to happen in such a way that the employees can decide themselves that whether they have to continue in the organization or not. So these concepts should be clearly informed by the people who are doing business with the support of the financial statement. Whether the employees will get any benefit in the future, like for example, whether they're going to get the increment or not. When the people are not getting the proper salary itself, whether the company is going to pay increment in the future dates or not, whether the company is stable for long run or not. If the company is not making any payment for as salary to the employees, whether it's going to stand in the market for long run or not. If there is no status of standing for long run, so then the employees has to decide that whether they have to work in the organization or not. So based on all these things, the people, for what purpose they require, they check the financial statements of the business, either trading account, profit and loss account, and balance sheet of any organization. So next, based on this concept only, the cost accounting came into existence. First, let us learn the concepts of cost here. Say, in normal way, when I say that one, cost is the amount of resource given up in exchange for some goods or service. Means, whenever I go and want to purchase any product here, I'll just ask them, what is the cost of the product? I'll just not ask, what is the price of the product here? What is the cost of the calculator? Oh, it is 300. So I'll say that one. For individual person, a common person, when he wants to go and buy any product, he says that one, the amount what I'm going to pay to acquire any product here, for that, whatever the amount has been incurred, that is the cost for me. In the same concept, the person who is converting the raw material into finished goods with support either directly or indirectly has incurred huge amount of expenditure has been incurred for the conversion. So in each process, how much he has spent and how he has spent, that should be added for the product. The resources given up are money or money's equivalent expressed in monetary units. The Chartered Institute of Management Accountant of London defines cost as the amount of expenditure incurred on or attributable to a specified thing or activity. That's saying that one, if I purchase the calculator near to my residence, like by walk if I'm going, and I ask, what is the cost of the calculator? He says that one, 450. So I'll bargain and I'll just pay 400. So for me, the cost of the calculator will be 400. For example, I don't want to buy the calculator near to my house. I want to buy where it is in the market. So I travel from my residence to the market through bus or by auto rickshaw or by the two-wheeler. If it is assumed that it is a 10 kilometer from my place to the market, 10 kilometers to come and 10 kilometers to go here. So 20 kilometers I've spent here. For that, what is the transportation cost? We have to add that one. And other cost incurred in respect of buying this calculator, where I got the same calculator in the market for 275. But 275 plus, I have to add my transportation cost also for this one. Then I have to say, actual cost of this product will be 275 plus 35, 310. It is not 275. So this is how the cost will be calculated by the people here. I should not say only the amount whatever I paid to acquire the product here. To acquire this product, what are the other expenditure has been incurred that should be added. That's what we are going to see here. The attributed to a specified thing or incurred means whatever the amount has been incurred here, add all the amount and then you say this is the total cost of the product. Say this activity of a firm may be the manufacture of a product or the rendering of services. The people are rendering services or a person is converting raw material into finished goods. For these people, the cost is very important. They say that, but according to me, each and every common person who is going to purchase or acquire any product for his own consumption for any other purpose of activity, the amount what he pays, that one he should know that one, what is the amount of expenditure incurred to buy that product and get the benefit of that product, that we are going to call cost here. A manufacturing organization is interested in ascertaining the cost per unit. Each and every manufacturer wants to know that one, what is the actual cost of a product here, so that he can fix a proper price for that product and where he can earn profit and survive in the market for long run, and the price should not be more and the price should not be less here. It should be in such a way that one, he should stand in the market for stable and the product has to be sold in the market without any hurdles. Even n number of competitors are there in the market here. My product should be sold without any hurdles. If I want to fix a proper and actual price for the product, I have to check that one, what type of cost has been incurred and how they have incurred and what is the actual amount of expenditure incurred, whether directly or indirectly. And here the cost incurring, it may be variable cost, fixed cost, semi-variable cost. Variable costs are those costs which are going to vary according to the number of units. Fixed cost is a cost where it remains constant for n number of units. So if it is 0 units, also same amount of fixed cost. If it is 1 lakh units, also same amount of fixed cost. Semi-variable, a small variation in the cost of the product here. So now, whatever the cost has been incurred by the manufacturer, whether it's going to vary or fixed or semi-variable. So based on that, the product should be identified here. Whether the service rendered by person, a transport undertaking, you check that one. If I am the source of units where is having and what are the destination places are there, how to deliver the goods from the source 1, 2 and 3 point to the destinations here. So now, so based on that, you just check that one. What is the transportation time will be incurred and the fuel charges for that one. And even with that is just going to check that one, the wages to be paid for the driver, cleaner and the cost of the vehicle, the depreciation cost and the maintenance cost. Everything will be taken into consideration. Then is going to fix the rate for that services, whatever is going to render. Either the canteen or the restaurant or any hotels where they are serving the food and beverages here. For example, here, if I want to sell 1 idli here, so what is the cost has been incurred for that idli? What was the batter it was taken place, that one? How much cost has been incurred for that one? And for the person who is going to prepare that one, what is the salary I'm going to pay for him? How many plates can be prepared with this amount of batter what we are having here? And how much of gas will be incurred for that one? And like this, after considering all the elements, then we're going to fix that one. Each idli is going to cost 15, where the actual cost of the idli will be 8 rupees and they're going to sell for 15. So 7 rupees is the margin of the idli what they're going to get here. This is an example what we're giving, right? So based on that, they're going to have, like that, we have electricity company, municipality, and they're interested based on the service what they're rendering. In its simplest form, the cost per unit is arrived. If I want to arrive the cost per unit here, what is the total amount of expenditure incurred for that particular product will be divided by number of units. So then I'm going to get the actual cost per unit. This method is applicable if the manufacturer produces only one product. So if I'm producing only one product, so then it is easy for me to identify the cost of the product and fix the price for that product. If I'm producing n number of products at a time with the same raw material, then it will be difficult for me, or with the different raw materials. Then again, for each conversion process, I have to identify separately what is the cost of the product has been incurred in the conversion process and what is the actual cost has been incurred directly or indirectly to the product here. Even if only one product is manufactured, it may be necessary to analyze the cost per unit of each item of expenditure that goes to make up the total cost. Each and every pin-to-pin expenditure should be considered here. Everything, like for example, I want to buy a dress here. I want to buy the dress in the market. So my residence is far from the market here. Assume that 25 kilometers. 25 kilometers, the journey what I have made here for coming 25 and returning 25, 50 kilometers. For 50 kilometers, assume that 1 liter of petrol in my vehicle. So 1 liter of petrol means it is nothing but 103 rupees for me expenditure. When I come to purchase the dress for me, the cost of the dress will be 1,500. So then I'll not go simply, I'll have a cup of coffee or I'll have some snacks where I've made expenditure of 250. So now, what is the cost incurred by me to purchase the dress here? I have to say 1,500, 103 and 250. That is nothing but 5, 6, 8, 1,850. That is nothing but approximately 1,850 I've incurred to buy the commodity. I should not say the cost of the dress is only 1,500. So we have to check that one. Then we have to say what is the actual cost has been incurred to acquire the particular product here. If the manufacturer produces more than one product, it becomes imperative to split up the total expenditure. So he has to think that one, how to make out and get into the concept here. Next we have here cost accounting. The problem becomes here when he is producing n number of products with the same raw material or with a different raw material. He should check that one, how many units has been produced of different concepts from the same raw material. What was the actual amount of wages has been paid, what is the expenses are incurred, and whatever machinery has been used for that one, how many people are worked in this process for each different products, and what is the area occupied by the machine in that particular plant layout. So based on this, all the things directly or indirectly which has been incurred for the conversion of raw material into finished goods, we are going to check every information, then we are going to fix the actual price of the product. For a consumer, the cost means price. Already said that one. Whenever a normal person wants to buy any product here, he say that when he'll ask in the market, what is the cost of the product? So now the price is nothing but cost for him, right? Next one, for management, cost means the expenditure incurred. See, for consumer, the price is the cost. For manufacturer, the expenditure is the cost. So here two things are there. You have to keep in the mind and then you have to write the concepts here. Next, the process of ascertaining the cost is known as costing. That's in that one. To identify the actual amount of cost incurred for the conversion of raw material into finished goods, the process what we are going to use to identify the cost per unit, that is nothing but costing. It consists of principles, rules governing the procedure to find out the cost of goods or services. It's saying that one, to identify the cost here, there are certain rules and regulations are there that should be taken into consideration, and only the information which is required that should be considered and that should be added for the product here, means at the time of process of conversion here. Not all the amount which is not required or which is not incurred that has been added here to identify the cost of the product. We should know clearly, so which are the costs are incurred here and what is the procedure are there. Say, in my identification of cost per unit, in the first level, we are going to call prime cost, then factory cost, office and administration cost, and then selling cost, then we are going to call as total cost. So this is the process we have here: prime cost, factory cost, office and administration, selling and total cost. For this, if I add profit, then it is called selling price. So if I want to fix this one, I should know the actual process, how to identify and what should be added and what should not be added here. For example, if income tax provisions are made, so here the provision made cannot be recorded in the costing. Only the financial aspect will record any provisions made, but here the provision made will not be recorded. So like this, certain informations of financial aspects are not recorded in the costing. That's the reason there will be a difference between the cost accounting profit and financial accounting profit. For instance, in transport companies, the total cost for the period is ascertained used to find out the cost per passenger mile, that is cost of carrying one passenger for 1 mile. So they're going to check that what is the cost will be incurred for 1 kilometer or 1 mile. Based on that, they're going to fix the price for the passenger or to traveling from one place to another place or transporting the goods from one place to another place. Based on that, they're going to fix the actual amount of rate for the transportation of goods or services. It provides for analysis of expenditure in such a way that the management gets complete idea about even the smallest item of cost. So when I'm going to try to identify the amount of expenditure which are incurred in the process of conversion here, so I'll come to know even a small penny also, whatever we have incurred here, it comes to my mind, I'll add that one. So then I'll just think, see, for example, I said already, if I say only the 5,500 to buy the shirt here, so it is not that one. For this, I spent petrol 103 and snacks 250 and other expenses 100. So totally 1,953. Approximately 1,950. I have to say it as 1,950 and not as 1,500 if you're a normal business person. But for common person, what he says, you'll never, leave this one, leave this one, leave this one. What is the cost? 1,500. So, but if you're a business person, you think in a different way. You never leave even a smallest amount of cost which has been incurred to acquire that product. Cost accounting, it is necessary to specify exact meaning of cost. When the term is used specifically, it is modified in that one. Each description implies in such a way that it helps the people to know for what purpose the cost has been incurred here. It helps the cost accounting in achieving its three basic objectives, namely cost ascertainment, cost control, cost presentation. So now the cost accounting helps in such a way that what is cost ascertainment, cost control and cost presentation. So now in this we are going to see that cost ascertainment means to identify the cost here. So what are the information we have considered, from where we have taken the information and how we have taken and how many people are involved in this one, directly and indirectly. How many people have spent their time, even if they have spent 1 hour time here, what was the wages is going to be paid for him. That 1 hour wages will be added for the cost of the product here. Means we'll assume that the wages, what we are paying, wages or salary for this person, whatever we are paid here, every day is spending 1 hour in the production layout and remaining 7 hours in the office. So 1 hour should be considered for the factory and the 7 hours should be taken in the office and administrative. Means here we should think that where the amount of expenditure should be taken into consideration, either factory or either in the office here. Different costs may be ascertained for different purposes under different conditions. So based on your requirement and other concepts, so the cost can be identified here, and based on the purpose for what it is required, you're going to check the actual amount of cost incurred here. work in progress is valued at factory cost, while stock of finished goods may be valued at cost of production. Saying that one, example here, work in progress means still it is in the under process of conversion. For that, we are going to consider the factory cost, where already we have converted the raw material into finished goods. For that, we are going to consider cost of production. So this is the cost where we are going to take into consideration, as I said, prime cost, factory cost, cost of production, cost of goods sold, total cost, profit and sales. Based on this, the cost will be taken into consideration according to the required part here. The cost per unit of a product is sure to vary with the increase in the volume of output. They're saying that one, the cost per unit is going to increase. So how, sir? If it is 20 rupees here for 1 unit, so for 100 units, it will be same, right, my dear? The cost it will be 1. And when you want to buy 2, this will be 40. So now I've paid here 40, not 20. Per unit is 20 only. When the number of units are increased here, automatically the cost is going to increase for me. It is also important to note that here that there is no such thing as an exact cost or true cost, because no figure of cost is true in all circumstances and for all purposes. Let's saying that one clearly. We are going to think in all the angles and we'll just write all the information, and we consider this the amount of cost incurred as expenditure at the process of conversion. And sometimes the thing cost of a product, whatever has been given, it cannot be exact. Most of the costing information is based on estimates. They're saying that one, in some of the cases, some costs are estimated information. Whether it is incurred or not, we can't make out, because the cost information are recorded without any source of documents. So when it is not recorded with the source of document, so it is nothing but the cost recorded in the books may be estimated, assumed one, or they may feel that one, I would have been paid this much of amount. I don't know exactly, but I think I've paid 100 or 150 or 200 or oh, exactly, I don't know. Okay, it may be 125. Like this, I'll think and I'll just write it in the books of accounts here. So in such cases, the cost information we have provided, it cannot be actual. The amount of overheads is generally estimated in advance. It is distributed over cost units, again on the estimate basis using different methods. I think that one. So sometimes we have not paid the labor. We will assume that the amount of labor may be paid for this conversion may be certain amount. So based on that, I'm going to estimate the cost of the unit here. Later, if I don't pay the actual amount of estimated labor here, so the cost is going to vary for me. So that's the thing, they're saying that one. In some cases, whenever you're going to ask any person, I want estimated price or quotation for this product, they say that there's an estimated cost. When they say estimated cost, in that one, majority may not be actual. Later, the estimated cost, they would say that one 10,000, sometimes it may be 10, or it may be 11, or it may be 7,000 also. So it may not be actual information, whatever they're given here. Depreciation is one such item, the amount of which will be vary in accordance with the method of depreciation being used. Say, example, we have here depreciation. Depreciation is nothing but it is a residual value of an asset here. In this residual value of asset identification, the business person, which method is adopted, based on that, the amount of depreciation is going to vary. For example, we have straight line method, written down value method. We have here straight line method, written down value method. Whichever the method is adopted, based on that, the amount of depreciation will be recorded by the business people. So it may vary from one business to other business, or the method what is considered here. So the arriving position of the business per cost maybe vary, or that's the reason they say it is not exact or the actual cost we are going to get from the information. Next we have here costing, cost accounting and cost accountancy. First we'll take costing. Costing is the techniques what we are using to get the information about the cost. The techniques consist of principles, rules, already I said that one, how we have to identify and which are the information should be considered and what it should be considered based on the business or the process what we're doing and the identifying about the cost. The techniques to be followed for the analysis of expenses and the process. Different products or services differ from industry to industry. So now here, to identify any cost here of any services or any product, it always vary from one person to another person. It can't be the same concept will be considered by all the business people here. According to the requirement, they will take into consideration the information and then they're going to fix the actual price of the product here. The main object of costing is to analyze the financial records, subdivide expenditure to allocate carefully on the selected cost centers, ends to build up a total cost for the departments, processes or job or contracts of the undertaking. So before fixing any price, take into consideration of all the things and allocate that one according to the department wise. Allocate according to the centers and then you are going to fix the prices here for the products. Don't take into consideration all the things into one part here where they are not supported either directly or indirectly. Cost accounting. Cost accounting is a branch of accounting which specializes in providing information about the detailed cost of products or services supplied by the undertaking. Compared with financial accounting, cost accounting is relatively a recent development. It is primarily developed to meet the needs of the management. Cost accounting was introduced to support the management for the purpose of decision making, whether the product has to be produced or not, whether what is the actual amount of cost we are incurring, whether we are earning profit or we are sustaining any losses here. Profit and loss account and balance sheet are presented to management by the financial accountant, but modern management needs much more detailed information than supplied by these financial statements. That is the reason cost accounting was introduced, and based on the required process, the cost with the different techniques, they're going to identify the actual cost for the based on the business what they are doing or the process what they've adopted to identify the cost. The information supplied by the cost accounting acts as a tool for the management to take the decisions in a proper manner, whether the product should be produced or not, whether to accept the contract or not, whether the process or technique, whatever used in the business to identification, whether it is worth for me or not. All these things are to be taken into consideration. Then we are going to finalize the actual part for the business here. The costing terminology as per CIMA, Institute of Cost and Management Account London, defines cost accounting: the establishment of budget, standard cost, actual cost of operation, processes, activities or products, and the analysis of variances, profitability or the social use of funds. They're saying that one, the London Institute of Cost and Management Accounting says that one, what is cost accounting? It is nothing but budget. Budget is nothing but estimation or the standard, what you're fixed. What is the standard cost? So what is the amount of fixation you made earlier one day for your product, or based on the actual operation which has been incurred or occurred at the time of conversion of raw material into finished good. All these things will be considered and finally it will be called as a cost accounting. Weldon defines cost accounting: classifying, recording, appropriate allocation of expenditure for determination of cost for data purposes to control guidance of management. The same that one, cost accounting supports the management to control the cost here, and even it supports the management to take the proper decision. If we are incurring huge amount of expenditure in one department and there is no expenditure in the required department, so this is going to vary here, and which is not worth for the organization. So it can take decision in which department they have to take more advantage of benefits and where they have to invest more amount of expenditure and get the benefit of that one, and how to make out and how to make the payment of labor, whether on the timely rate basis or piece rate basis. So all this consideration can be achieved only with the help of the costing. Cost accounting is different from costing. The information assessment of cost, once the information is made available, costing can be carried out arithmetically by means of memorandum statements or by method of integral accounting. They're saying that when costing is different from cost accounting here. Cost accounting is the thing which will be used as a statement for the internal decisions. Cost accountancy has been defined as the application of costing and cost accounting principles, methods, and techniques to the science, art, and practice of cost control and the ascertainment of profitability and presentation of information for the purpose of managerial decision making. Cost accountancy is nothing but where it considers the costing. Cost accounting means the techniques what they've used, the methods what they've adopted to identify the cost, and which cost center has been considered and which departments has been taken into consideration. And all this, with this support, whether the management can take a proper decision or not. To take the proper decision, cost accountancy is required for all the manufacturers. In today's session, we have discussed about the financial accounting, cost concepts, main meaning of costing, and even cost accounting and cost accountancy. Go through this session and it has been explained with a very simple concepts and which supports you people for the examination as well as for other future aspects for the business. Thank you to all second sem BCom students. So it is good for all you people to know about the cost of the product.